During a period when more borrowers are facing stress from higher interest rates and higher prices, there's still a large group who are willing to borrow at even higher rates. Then there are those willing to invest to gain those higher returns without a government bank guarantee. For more than 70 years, Trobe Financial has played in this higher risk sector and is now backed by the Canadian investment giant Brookfield. Well, this week I spoke with Trobe's Chief Executive Chris Andrews to find out who's taking on these risks, borrowers and investors, and why.
Look, it's a time where we've got cost of living pressures, we've got a productivity crunch, we've got growth slowing, and we've still got inflation stubbornly high. So for the economy generally and for a lot of investment strategies, it is a time of elevated risk. There's no doubt about it.
So you have to manage that risk, given the fact that you are lending to people who are taking on projects, people in small business. How do you manage risk during this cycle?
The perennials of risk and risk management, Ross, are always the same. It's all about being very, very careful with the assets that you select. So what do we look for? We look for borrowers with really good credit quality. We look for really good quality security collateral that we can take to present to protect our investors' position.
So in other words, we're talking property there largely in many cases?
Yeah, property there. So most of our strategies are Australian real estate private credit. We've now launched also a US mid-market corporate credit strategy. But the fundamentals of credit are the same, and they're the same through the cycle. Quality borrowers, really good collateral protection.
OK, so your owner is Brookfield. Brookfield, of course, famous for having wanted to take over Origin, done very big projects in the energy renewable space here in Australia. Massive funds manager out of Canada. How does that help you expand this business beyond where it is right now?
Well, what we want to do, Ross, is bring to Australian investors really high-quality strategies. And when we partner with an organisation like Brookfield, really the world's at our feet. So what that gives us the opportunity to do is to select the best of the investment strategies around the world and bring them to Australian investors. So it's an exciting time for us, for sure.
OK, so your headline fund right now pays about 6.75%.
Yes.
But for you to generate that return for the investor, you've got to be lending out at higher rates than that. Around about where would the portfolio average in terms of its return to be able to generate 6.75% for the investor?
So on average, the portfolio, our management fee is 1.8%, Ross, so it's no secret. You can gross that up. So on average, the portfolio is delivering about 8.5%. What we're doing is lending to a very broad cross-section of borrowers, residential borrowers, commercial borrowers, and again, those same fundamental credit principles, high quality borrowers, lots of collateral protection, because, there's 11,000 borrowers in that portfolio, Ross, and we know with that number of borrowers from time to time, some of them will experience difficulties. So we want to make sure we can protect our investor capital throughout.
OK, so tell me right now, the banks we can see are experiencing higher bad and doubtful debts, just starting to come off all-time record lows, mind you. So what's your experience, given the fact that technically your risk should be higher, mainly because the price you're charging is also higher?
Yeah, interestingly, arrears for us are actually coming down. They're still, as the rest of Australia are seeing, I think the banks and other lenders are seeing, Ross, very low levels of arrears, albeit in some parts they are creeping up a little. For us, actually, arrears have been coming down pretty consistently over the last 6 months. Now, one thing you know about arrears is there's always a cycle. As unemployment goes up, lenders like Trobe absolutely expect and prepare for the fact that there may be more arrears coming down the pipeline. But so far, we're seeing a really good, strong performing borrower cohort.
OK, so from the economy's point of view, from the government's point of view, and from even you and your lender's point of view, it is really all about employment right now. That's the thing that preserves your businesses. That's the thing that preserves asset values. That's one of the keys for Australia's economy right now.
Unemployment is fundamental. It's fundamental to the economy. It's fundamental to investment strategies all over the market. So the fact that we've got such low unemployment is, from that perspective, good. But economics is the art of trade-offs, Ross, and such low unemployment does, of course, sometimes lead to inflationary pressures. So getting the balance between those factors is what's critical.
OK, so you have traditionally also been a lender to the property sector. Now, what I'm thinking about here is not the big end of town. It's going to be to people who are developing in the suburbs and so forth. The Prime Minister has a target of 1.2 million extra homes over the next 5 years. Are you a part of that solution?
100%, Ross. We expect that for the next generation, our business will be providing capital to, if you like, that suburban infill development. We're not really a big fan of the large apartment towers, for example. That's not a space where we typically play. But the middle ring, the suburban infill, is a very active part of the market for us, and we expect that will be a wonderful opportunity for our portfolios for the next 20 or 30 years at least.
So in other words, those people seeking credit for those types of deals where they're trying to put 2 or 3 blocks together and put up a block of flats or some townhouses, whatever it might be, that's pretty much your lending customer.
We will be very, very active in that part of the market, yes, Ross. I mean, we've got very diversified portfolios. That's one thing I should stress. That's not the only bet we're taking over the next 25 or 30 years. But yeah, that will be a wonderful driver for portfolios and for our investors.
And we started talking about private equity, but while private equity is now known in taking ASX companies off, it's also at the smaller end of town.
Yes.
And to a certain extent, with the right business, with the right loan-to-value ratio, that's what you'll do.
Yes, so we are now launching a US mid-market corporate credit strategy. That's loans to that real heart of America. That really one of the most bipartisan policies in the US now is rebuilding middle America. So we think for Australian investors that's a wonderful investment thematic to be participating in. So yeah, we'll be a really happy provider. Again, high quality, very careful asset selection. We've partnered with Morgan Stanley, one of the largest US financial institutions, to deliver the right types of assets for our investors, and we're very excited about what that'll bring over the next 10 and 15 years.
Chris Ender, it's good to have you on the program today. Many thanks for your time.
Thanks, Ross.